It reminds me of, back in the 80s, these gangster rap albums would keep pushing it. And it was finally Two Live Crew where they were like, all right, this is too much. We cannot carry this. So this is like as nasty as they want to be of ETFs. And it proves there is a line somewhere. But I would guess, just like gangster rap, in 5 or 10 years, maybe we look back and go, I can't believe they didn't list that, considering all the other stuff that's come out since.
Hey folks, welcome back to the ETF Zoo, and boy, do we have a lot of animals in the pool today. We've got Cinthia Murphy from VettaFi. Hi, Cinthia. Eric Balchunas from Bloomberg, Todd Sohn from Strategist, and of course, Sumit Roy from our own shop here at ETF.com. Hey, let's jump into this. We've got the year end. We can finally look at all the big numbers, and I have a feeling we're going to have to start by looking at the biggest of the big numbers, which is holy cats. The size of it has been phenomenal. Todd, I'm stealing your chart here. I think we all did a version of this chart, which basically is the oh my God chart. This blew me away. The fact that we had not only just this incredible ramp into December, but like we actually had $40 billion show up during the holiday week, which to me is incredible. Eric, let me throw this to you first, because I know you've been looking at all this. We were just talking about this. Is this normal, or is this way out of bounds?
It's way out of bounds. Decembers are usually very good. You can see from his chart, I mean, if you really zoomed in, you'd see Decembers are generally a little bigger than normal months because of tax loss harvesting. That's usually a month where SPY catches up from the outflows it had the whole rest of the year, and it comes out to zero. But that catch up is worth like usually 30 billion extra. But this is like a whole different ballgame. It's kind of like the perfect capper to a year, which was a whole different ballgame. So the crazier part is if you take the 230, combine it with the year, you get to like that 1.47 trillion. That is 6 billion a day. Like just a minute ago, a billion or two a day was like the normal pace. So time's flying so fast for me. That probably was about 10 years ago. But I just remember in my brain going, yeah, ETFs do $1 billion a day. And if the stock market's good, they might do $2 billion a day. I remember saying that not that long ago.
Yeah, just crazy. I mean, Cinthia, what do you think here? I mean, you've been following this market for a long time. Is this something we're going to see more of, or do you think this is just a lot of year-end repositioning, a lot of folks getting out of their mutual funds and doing some tax loss harvesting, or is this the new normal?
Listen, to tell you how little I know, like last year in January 2025, my big prediction was flows are going to moderate this year because people are nervous about markets. We're not going to match the previous year's records, and massive egg on my face. So maybe this is the new normal. The more we doubt it, the more they show us that ETFs are just going to keep delivering and being the vehicle of choice. So I don't see what stops this train.
Anybody got it's prediction time. Anybody got a hot prediction on flows for next year? I think over $1 trillion is kind of like in the bag. But where are we going here? And we got mutual fund conversions coming. We got mutual fund share classes coming. We have lots of product already in the queue to launch, some of which may catch a bid. Does anybody think we're going to have a $2 trillion year?
Why not?
Sumit's going. Yeah, you think we got that much interest?
I mean, why not? I mean, if the bull market continues, we hit 1.5. The year before was what, 1.1-ish? So, that trajectory, we could hit 1.9. The crypto launches are going to go crazy. The conversions, like you said, are going to go crazy. No one knows what's going to happen, obviously, but the trend is your friend. And in this case, the trend is extremely, extremely from the bottom left to the top right. So yeah, I'll take 2 trillion. Total wild guess, but I'll go there.
Yeah.
I'll take the other side. I'll say
you
no.
Take the under?
Take the under.
I feel like it's a pretty decent line, honestly. I feel like we're going to draw a line in the sand. I'm not sure I can do better than that. Let's talk about some of the folks that are showing up into this to this crazy pool. Like this, we just got this from Morgan Stanley, which has now decided that they want to be in. I think last time I checked, we had Bitcoin, Solana, and ETH. Did they file anything else while I was asleep?
I think that's it. I think 3. This is interesting. This does have a little bit of that hello fellow kids feel, like when T. Rowe filed for the active crypto. But Morgan Stanley, they needed some sexiness. Their product line, I mean, I know they don't need ETFs help, by the way. This is a massive bank with tons of revenue, but Morgan Stanley has always been interesting to me because I think they tried to skip ETFs. They bought Parametric and they thought DI was going to be the next thing. And it just, they do have some niche for that. That means it's a viable product, but it just wasn't the game changer. And so they had to get into ETFs. They tried to launch their Eaton Vance mutual funds into ETFs, and they were a little late on ESG. They just day late, dollar short for most of their, 4 years in the market. This, I think, gives them a little bit of a little hot sauce. And I think what's great about this is we used to have a phrase, BYOA greater than PTOG, pay the other guy. Remember when JP Morgan launched the JP Morgan Canada ETF? And it's like, what the hell does that mean? And then all of a sudden we realized they had like $4 billion in the iShares Canada, and they just moved it to their own. This is like the Acme brand move of the in-house product. And if you have $8 trillion in advisory assets, and I don't know how many thousands of advisors all over America, why not just put it in here rather than pay BlackRock? So it makes sense to me. It's smart. I think it checks a couple boxes for them, and I'm guessing that's the calculus they found too.
Do you think, looking at their lineup, largest ETF is 4.3 billion right now?
That's all I think that's it. Isn't that their whole?
The whole thing is 14.
Oh, yeah, right. Sorry.
Will let's just say Bitcoin be the largest by the year end? I think yes.
Oh God, no.
No, you don't think so?
No.
Well, I don't know. I mean, do you like JP Morgan? I know personally had to sell their own internal people, and sometimes there's like a reverse nepotism thing, which is like I don't want to be seen as having a conflict of interest. I just don't know how compliant Morgan Stanley's advisors are, where they'll just use Morgan Stanley brand and they don't care. I just don't have a feel for that. So if yes, they have a shot. But to be 12th to the market, and there's like 4 big liquid ones that most people use, this is really tough to get organic assets in.
My question with things like this is, for us on the outside, what is the measure of success? Maybe organic growth is not a measure of success they're looking for. They just want to keep that internal money internal, and that's good enough. So from the outside, it looks like they're not attracting a lot of assets, but maybe that's never the goal to begin with.
Yeah, although Eric's point is true that I think we often forget how big some of these wirehouse advisory services, like this one and Merrill in particular, like they just command like $10 trillion each of actual client assets. I know it's not quite that much, but if 1% of those assets end up in Bitcoin, then this fund would be the recipient, and it would be rapidly the largest Bitcoin fund. Now, I don't think that that's really likely going to be what happens, but boy, it does seem like throwing spaghetti on the wall, except for the distribution put. That seems like the ultimate play.
Can I throw one stat out there? I think 2025, I don't know the exact numbers, but total inflows into Ether ETFs were something like 9.9 billion. And of that, 9.1 went into ETHA, the BlackRock product. So super concentrated inflows into this category. Even the Fidelity ETF didn't really gain that much traction last year.
Let me just give you a quick fun fact. When JP Morgan came out with the Canada ETF, I'm just going to go by today's assets. Let's just say they had 7.5 billion in the iShares. Today, the breakdown is they have 6.5 billion in their own and 500 million in the iShares. So that's a case where they did. Now, I don't know if it was one model move or it was one person's brain you had to convince, or where there was a lot of people in the private banking. I just don't know exactly how many brains had to be converted there, but that's a pretty promising sign. Now, JP Morgan also came out with BBUS, but nobody wanted to use the S&P 500 knockoff. So that couldn't get any traction. So I guess there's a case that you can see it working, and then there's some cases where the in-house thing doesn't work.
Yeah, I'm skeptical that folks who are new to crypto are necessarily going to trust their in-house brand versus, when they Google who's a big deal in crypto ETFs, and they're going to find Bitwise and BlackRock primarily and Grayscale. I think it's going to be tough for Morgan Stanley to get anybody who puts a really critical eye on that. That being said, God bless. I mean, it's not like I'm worried they're going to mismanage the fund. It's not. At this point, this is pretty tried and true. Let's talk about somebody who is not seeming to be able to get to market. Eric, I'm going to share this from your team. This is from the Grift ETF. which is Tuttle's latest offering. I'm not a huge fan of a lot of the Tuttle products. They're definitely out there on the spicy edge, from the inverse Kramer funds to whatever the heck they're cooking up now. This one I admire, at least because it's all out there in front, right? It's just the Grift ETF. But the news here is nobody wants to list this thing, which I find shocking given the other things that everybody's fine listing. Eric, what's your take? Like, is this just a fit of pique from these exchanges, or are they just really setting up the Texas exchange to own all the weird stuff?
I don't know. I'm surprised too. It might just be too on the nose in terms of its cynicism. Whereas Nance and these other ones like Cruz, they were like close to being like outright saying that like people who are in politics are corrupt. But this one's like right on the nose. It's corrupt. Let's profit. It might just be a little too close to the bone. And finally, there is a line where people are like, no. It reminds me of, back in the 80s, these gangster rap albums would keep pushing it. And it was finally Two Live Crew where they were like, all right, this is too much. We cannot carry this. So this is like as nasty as they want to be of ETFs. And it proves there is a line somewhere. But I would guess, just like gangster rap, in 5 or 10 years, maybe we look back and go, I can't believe they didn't list that, considering all the other stuff that's come out since.
Yeah, it's wild to me. Do you think it all just ends up in Texas? I mean, I feel like we're in a weird world where exchanges may start acting like the new regulators, right? If exchanges are going to start getting picky about what kind of product they want on, that's sort of what people thought the SEC was doing, right?
Well,
Yeah, but
go ahead.
no, I was just gonna say, like, I would think, I mean, exchanges are a business too, and they're out there trying to biz dev, and they have to compete with other exchanges, with each other for the listing. So, I mean, do you want to take the reputational risk of, hitting, touching this? I think it's just too hot to handle for what? What's the upside here? So I can kind of see why not.
And it's really just the name and the way they describe the ETF, right? You could conceivably, like Eric said, have the same exact strategy, but have a different name, have a different description, and it'd be totally fine.
Yeah.
You can't have like the war profiteering ETF, even though it would hold the same defense stocks the defense ETF sold, right? So I think that's what they're taking issue with.
I'm just sort of shocked that we're even entertaining the idea that something was like reputational risk. Like, when did reputational risk start mattering again? But I mean, I kind of give both the exchanges and Tuttle credit for the opposite sides of this. The exchanges have drawn their line in the sand, and Tuttle's being really honest about what's going on. So it's one of those weird things where I find myself on the other side of an argument that I'm usually on the other one of. All right, but let's talk about another set of products that probably aren't getting launched. These come from Vega Shares, who I'll be honest, I don't know these people at all. I've never had a conversation with them. These guys filed these things right at the end of the year. They're 3 and 4x on a normal list of ETFs we'd expect here. But does anybody have a clue why they think these are going to get launched? All the other ones got pulled back because the SEC said no when we had the whole shutdown raft of these things coming out. Anybody got a clue?
I don't get it. Like, didn't we already do this? That's total loss without finding any sort of nuances in the prospectus. I glazed over it, but we already did this. This episode happened in 2025. we replayed this already.
I feel like I must be missing something. I read the prospectuses. They look just like everything else. They make no mention of passing their value at risk tests. Nothing like that at all. They're just literally like boilerplate launches. Do they really just think people are asleep? And so nobody's got a clue. Nobody's got an inside track on this one.
I like that. I know it's called Vega Shares, but I like that it has Vegas in it, to be honest.
I know they should just come out with Vegas Shares or something.
Yeah, come on.
Just add an extra S.
It's a missed opportunity.
Real quick, when I did look at these, I wondered if there was something to do with the fact that it tracked a single stock ETF, and that was the quote benchmark. Like, because I know in the SEC letter back, they went back to the benchmark, and I just didn't. I wondered if there was something to do with that, but I don't know.
I couldn't figure that either, because if the reference asset is like the Qs, well, then it's pretty clear in the 18 before rules that in those rules that you have to use the reference benchmark that is the obvious one that you're tracking, which would be the Qs. So Okay, I'm glad I didn't miss something here. I feel a little bit less like an idiot. But let's feel like real idiots here. Let's post some stuff from advisor sentiment. Cinthia, I'm going to grab one of these because one of these came from a presentation you just did with Nate Geraci at ETF Prime. But this was sort of surprising me with two different advisor surveys here from two different groups, one from VettaFi, one from these guys at Inspire X that I've never heard of before. But both of them basically say advisors are real darn bullish on 2026. And very few people think that we're going to close lower at all. My take here is I'm not nearly this bullish. Does anybody else think this is a little Pollyanna?
Yeah.
I am admittedly skeptical for the first half of the year. It's called first 3 quarters of the year. I think, especially from our corner of the world, everyone's bullish. And midterm election years are usually volatile, which is not a hero thing to say. And you're coming off of 3 straight great years. Yes, a 4th year is not unprecedented, but I think enthusiasm swings too far in one corner. It's ripe for a correction.
Yeah, I agree. I thought last year with the Triple Crown, all those 3 records, the last time that happened was 2021, and that was a utopia year. 2022, nobody expected a big inflation print. That was a black swan. That forced Fed to lower raise rates, and it was a brutal year. My spidey sense is we have to have some black swan hit us a little bit here because of 3 straight good years. And it seems like when people do all turn bullish, that's when you should be the most skeptical. Whereas last year, it was a lot of negativity and the market overcame that, which is more typically how that works. The other thing I would say here to counter that, which is that, they're going to put a new Fed chair in, and it's going to be a yes man, and the rates are going to come right down. We could have negative rates in a year. That it's so hard to get bearish with that. But with rates going down quickly, that's when you could get an inflation print or something crazy on that front. But I'm thinking the black swan comes from somewhere else, something we're not even considering. And the higher you go, the smaller the needle needs to be to pop it, because everyone's already like ready to take profits. So I'm skeptical, and that's why I would take the under on the 2 trillion. Sumit, even though I'm as bullish as they come on ETFs,
Okay.
I think that the stock market's usually like this year, I bet the stock market going up 18% was good for about 400 billion of the money. I think they'll take in $1 trillion natural, but then I think overage would have to have like good markets all around. And I don't know. Like I said, it's more of a gut feel, but I do think that number looks high.
A lot of chasing.
Well, now I'll just add some context, which it's almost ironic, but from that same survey, they're super bullish. But then when we ask them, okay, so what are you most focused on for the next year? It is diversifying their equity exposure. And it is number 1 client concern, managing risk and maintaining results. If at all improving, but at least maintaining results. So they're bullish, they're confident, but at the same time, they're like, you know what, we need to diversify this. A lot of appetite for small caps and international on the questions we asked. So it's like, yeah, let's be bullish, but also let's prepare for a downturn here. So it's kind of like, it's a really mixed story. It's kind of interesting.
That sounds like the setup for a run in buffered funds. I mean, we're going to see Goldman Sachs is going to take over Innovator and just spam them out at everything.
That's why SGOV is a cash vacuum cleaner, because everybody is buying their beta, but they're also buying SGOV and a couple other, but that one in particular, that's like your sleep at night it's almost like cutting your beta with a little sleep at night hedge. Gold is that to a degree, but I think people think gold's a little long in the tooth too. But I think treasuries will never go out of style, especially that particular ETF.
That fund is almost 2 times as large as BIL, and it launched like 13 years after it.
I know. It's
wild?
a beast, man.
Wow.
Nuts.
All right, let's wrap things up here with anybody got any hot takes for predictions for this year? I won't make a market call, but I will say I do think at some point this year we're 15% down. It seems almost inevitable. We're due for
50?
a good run. 15.
Yeah, sure.
Like we need a good solid sell, and not like one of those April ones that did not count at all. I'm talking like we need a good solid 3-4 weeks of pain. And
Yeah.
I'm not rooting for that. I mean, I'd be happy if the market goes up 25% a year for the rest of my life. I'm not complaining. But it does seem like something's going to pop. And I think what will pop is probably something in the AI space, whether it's a new DeepSeek model, whether it's somebody comes up with an efficiency gain. The market moved pretty hard when Nvidia was talking about all of a sudden they don't need cold water to do chips anymore. That had an impact. So what happens when somebody comes out with an actual breakthrough, an actual innovation? I actually think it could be terrible for the market in a short term window. So that's my big hot take. Anybody else got a spicy one?
Yeah, I mean, the market, as it relates to the broad stock market, yeah, AI is going to be the driver. 40% of the S&P 500 is the top 10 stocks. Many of those are big tech. But I did just put up a piece, 6 predictions for 2026. And one was actually related to SGOV, which Eric just mentioned. Just extrapolation, I said it's going to be $100 billion fund by the end of the year. Last year, it took in $39 billion. It's sitting at $70 billion right now. And this is a trend that is picking up steam. Ultra short-term bond ETFs and then the newer money market ETFs are becoming quite popular. There's $7.7 trillion in traditional money market funds. If even just a small percentage of that goes into ETFs, then you're talking big, big numbers. So I expect tremendous growth in this area going forward.
The money market thing is interesting. You're right, because especially if rates go lower, you're not getting 4.5% anymore. You're getting 3, 2. Then it's better to move somewhere else. That's a good one.
Yeah, I think that mid-level income thing, like if rates are, down half a point or a point from where they are now, anything that's yielding 5 is all of a sudden going to start looking really juicy. And we haven't been paying any attention to those products for years.
You're getting 369 on Vanguard Federal Money Market, which is that's dripping.
Headed to 2.5 real fast.
I do like, as much as there are buffers and so many other options, I'll throw out that I think low vol strategies make a comeback.
Really? Just straight up low vol?
I think just straight up people are going to say, you know what, I'm going to move part of my equity sleeve, the high beta, Eric's laughing at me, the high beta stuff into lower vol equity strategies. They leave the buffers somewhere else.
Yeah, I'm a seller on that one. I don't agree with that.
That's a hot take. Yeah. I mean,
throwing it out there.
It's a good one though. I don't agree, but it's a good take.
Other than the fact that you're wrong.
If there is a nasty correction, I think they'll
buffers killed the low vol star.
Exactly. You always coin the great phrases. That's exactly what's happened. I think options
low vol
replace
is
all
like,
interest.
Maybe you'll be protected. Buffers are like, you will be protected.
Right.
It solves the low vol ambivalence. I don't know, but maybe. I mean,
remember, all those low vol products launched before all of these options products.
Well,
were
you know what? You're lucky
yeah.
though, Todd, is if BlackRock's model buys USMV, you're going to look like a genius. And you know they will. So on it,
the model gods are going to hear me.
Yeah, that's where low vol will get you get help with the models. They won't use buffers.
Eric, you got a hot take?
All right. One, I think VU will hit $1 trillion. Even if it takes in what it did this year, it'll when the market is flat. So if the market goes up 10%, it should be easy. It should be like October, November. Then the other one is that I think after seeing Ron Barron add a little X.AI into his ETF, I think more and more companies are going to, I call that the copper wire, in an air conditioning unit. People just want the wire, so they steal the whole air conditioning. Well, the ETF's the air conditioning unit, and the copper wire is these private equity allocations. And people are going to start putting those copper wires in their thematic funds. So let's say you have a healthcare, you can put Neuralink in there. You have an AI fund, you put XAI. This is a way to sort of round out your theme. And after what happened with XOVR, I think more people are going to do it. I'm not judging if it's the right thing to do. I just think more and more people are going to want to get ahead of IPOs. And it makes sense for a thematic ETF to push that 15% limit, I think, if that's your theme. So I think we'll see more of that. Right now, there's 2 ETFs to do it, and I think that'll expand.
I think there may actually be more. Like, I think this is the funny. I mean, when I saw the thing roll through on Ron B, I was like, I'm not actually sure I would have a great way of doing this, because a lot of these securities, no offense to Bloomberg, they don't necessarily show up in Bloomberg in a really consistent way either, because they're not publicly traded securities. That's the point. So I agree. I think we could see most thematic ETFs making use of that that liquid bucket, which I always feel like I have to point out, just like Contrafund did throughout the 1990s with IPOs. I mean, this is not actually new.
Yeah.
It's just
What,
new in
what,
the ETF wrap.
you know what's crazy? Ron Barron's mutual fund and Kathy Wood's venture fund, which is a mutual fund, has all this stuff and more,
And nobody cares.
and nobody cares. Like it's one big copper wire, and like nobody cares. They'd rather have the air condition just to. It really makes no sense. That's how much stank is on the mutual fund wrapper.
Yep, I agree.
I
Cinthia,
don't
how
get
about
it.
you?
No, I actually don't have anything too hot. Actually, one of the things I'm really curious to see it's in the crypto space. I love all the broader market cap, the index approaches in that space, and I'm just curious if this will be the year when they kind of take off, because just being in one crypto has been challenging. Like after Bitcoin last year, so I'm curious if they actually take hold this year. From what we talked to folks on this side, still at least 50% of advisor assets are not touching crypto yet. But there's a lot of percentage, over 30% that said 0 to 10% when we had this survey back in November. And so I would love to see the broader takes, because I love diversification. So I'm looking forward to seeing those products take off this year.
It makes so much sense to index
Oh,
that stuff.
Can I I want to ask about this. You know what? In the precious metal space, they've got these precious metals ETFs. Those didn't do too well. They've got gold, silver, platinum, palladium. I think Glitter has $1 billion. DBO might have $1 billion. Do you think we'll see more with the crypto index ETFs and those baskets than we did with the precious metals?
Like more success, more traction, you
Yeah,
mean?
more success, more traction. In other words, are people going to look at crypto more like the S&P 500? Yes, give me an index, or more like precious metals where they just want one or two and they want to like unbundle it. I don't know.
I
I
mean, I
Look
think
at
that.
oh, go ahead, Cynthia.
No, I was just gonna say, I mean, if we look at the evidence so far, they would just pick the gold and like Bitcoin and Ether. That's it. But I also think, I don't know, maybe it's the wrong thinking, but I think crypto is a completely different beast. And to stay on top of each of the coins, what they do, what they represent, is much more difficult than to understand palladium, silver, gold. So I think it's a space where that kind of broader diversification makes more sense, is an easier plug and play than it is going to figure out each one individually. So I think it might just be an easier solution.
Look at
I
PPLT.
think
It's
the
got
concentration.
three in it.
Yeah. I think the concentration, you look at any of the index funds, they're 80, 90% Bitcoin Ether. So the benefits of the index diversification just isn't there yet. Maybe one day when it's spread out more and you actually have, 100 crypto assets with significant weightings in these indices, then it might make more sense.
also think, remember when an Index Universe wrote this, CN, remember that was the Deutsche Bank All China? They finally solved putting all the stupid alphabet letters into one fund, but like nobody cared because they had already bought FXI. Then Asher came out, ASHR, they bought that. So by the time CN came out, they had assembled the pieces and there was no need to buy the basket, or they just wanted to trade the pieces. That was one of those ETFs. I was compared to the movie Tree of Life, where like all the critics liked it, but like nobody went to see it.
There's a lot of ETFs like that. There's a lot of ETFs I know we all like that are just like, and $27 million does not care. But I think,
Yeah.
Cynthia, to your point, I could see a world where you take something like Bitwise's BitB, which is very, to your point, very Bitcoin and ETH dominant right now, and actually carve out the Bitcoin piece of it at least and say, look, there's Bitcoin and then there's the rest of the ecosystem. I actually think there might be traction for a rest of ecosystem
Yeah,
index crypto.
I agree. That's what I personally, as an investor, I would do Bitcoin on my own and then buy that for the rest and manage those two items. That's just me.
Same.
Speaking
Like
of,
I'd want like a smart contract platform ETF, focused on that, because crypto is turning into like a million different things. If we're going to have stocks on the blockchain, bonds on the blockchain, those are all crypto assets, but they're so different from Bitcoin. So why should they be lumped together in the same ETF?
Yeah, I agree.
Yeah,
I agree.
I agree.
Speaking of the crypto metals and whatnot, have you looked at the stock of Sprott lately? Sprott, the
Through the
funds
moon.
company.
I love
it's
that you look at. You mean the actual company?
the company Sprott that does all the Sprott metal funds, it's up 173% in about 190 days.
Oh, jeez.
Why? Because of silver or uranium or something?
Yeah, I think because of
And
what's going
gold,
on in the
all
whole,
three, yeah.
I think because of Metal Mania, and they run all
Yeah.
those
Wow.
funds.
And not
Yeah.
only do
I
they
think
run
it's
those funds,
percentage.
they run the swap contracts that the other funds are in too.
So, and I want to bring this back to Nate, to his predictions. He said more ETF M&A. I mean, if you want exposure to that stuff, it's all built in there.
Yeah,
And
I
it was
think
niche. I know it's
definitely
nichey though.
I think we'll see some more M&A this year. That's for sure. I mean, I was surprised to see Goldman buying Innovator. Like that was a big one, but I think we'll see some other, multi-$100 million, billion-dollar type deals roll through in the next year. It seems almost inevitable. There are too many people who are trying to get into the space. For sure. Well, look, this has been great. On the note of Sprott, I just finished editing the commodities ETF of the Year awards for ETF.com, in which Sprott is featured 3 times.
Really?
Which is bananas. 4 if you count the Roundhill Uranium ETF, which invests almost exclusively in Sprott swaps. So they're definitely there. But I'll put a reminder out there. Please show up to the ETF.com awards. Your vote matters. The editorial team did our part. We got the nominations out there. And now it's all on you. And thank everybody else here for joining us. We'll see you next time in 2 weeks at ETF Zoo. Cheers.